Thank you everyone for joining us. These are long days of information, so appreciate any of you that are taking the time to chat with us today. So my name is Anna Sarah and I'm Director of Listings Development with the Canadian Securities Exchange. And the reason why I'm here is because our exchange is host to 150 cannabis companies. That number changes so quickly that it's probably more than that by now. We currently have 475 companies on our exchange. We've been around for 15 years. We were born as a small cap exchange, but the cannabis industry is launching us to new places on the map. We've had companies join us that have higher trading volume than senior exchanges, and IPOs that are raising upwards of 150 million. Some of our companies now have over $1 billion in market capitalization. So this industry alone has definitely done some wondrous things for us. We also currently have, of those 150, 50 of those are US companies. We made a decision a few years back when we got an application from a company that had US assets that we would take on these clients. There isn't any other exchange that will take on US assets across the border in the cannabis sector, excuse me, in the cannabis sector. And what this has done is this has allowed this entire market in the US side of things to join us at the exchange. It's been an incredible opportunity for us. So we heard the bio of my partners here with me today, and we're going to get into a discussion around valuations and where we see things going. But maybe I can let you guys jump in and although we've heard your bio, maybe why you're sitting here with us today to have this discussion. Vikas?
Yeah, so, as mentioned, founder of Wellcan Capital, we invest in early stage businesses in the cannabis industry. So I think just bring the perspective of investing in private companies at the early stage, a mix between ancillary and plant touching in the U.S. and what that looks like juxtaposed against what's happening in the Canadian public markets, as well as private companies that are moving ahead of that execution.
As they said, I'm a partner in Greenspan Marder in their Phoenix office. What I'm not is a cannabis lawyer. I'm just a simple country M&A, corporate and finance lawyer that got involved in the cannabis industry about 3.5 years ago. And I'm here because the first topic on our calendar is there a PodCom bubble, which coincidentally is the same title as an article that's going to be published next week. So the hard copy of that article will be available at our table in the sponsor room tomorrow morning.
Steve might be country, but he's not simple, that's for sure. Steve, why don't we start with you? Why don't you tell us about this article and your views on where you things are going?
So there's been a lot of conversation about valuations, partly because of what's happening on the CSE, partly because of what's happening in the private markets as companies are making acquisitions, and partly as a result of the strategic investments by Altria and Constellation. And there's a lot of concern that there may be a bubble coming. In fact, I think Troy mentioned something about that in his early remarks. And while I believe there are similarities because of the uncertainties of valuation between the early dot-coms and the cannabis industry, I think there are distinguishing factors, this is the good news, that will keep it from being a real bubble. And I think there's some other forces at play that will have the same effect. So let's talk about the distinctions between them. About the similarities. The early dot-coms were based upon a concept of impressions. And there were assumptions that they would be able to continue to grow their impressions and eventually monetize them. And ultimately, most of them couldn't do that. And there was the bubble burst, partly because there were new mousetraps that were introduced into the marketplace. The similar uncertainty in the cannabis industry, because there is no operating history, most companies have not generated significant revenues. While there have been significant improvements in the C-suite based upon bios, these are not people who've proven that they can actually operate these businesses. So there's a lot of uncertainty about how they're going to achieve the kind of projections that they made. I had the ability to see some of the pre-RTO decks for some of the big companies that went public, and I would characterize their projections as rosily aggressive. And so That creates the risk in the dot-com and pot-com industry. The distinctions are that the dot-com industry involved an abstraction. I think I remember an early question by one of the 60 Minutes interviewers about what is the World Wide Web anyway. So it required a leap of faith for people to invest in it. And it was essentially based, as I said, on the assumption that they would be able to continue to grow their impressions and monetize them. In the cannabis industry, it's a very concrete, everybody knows what weed is, and everybody knows what the weed products are. So I think there's a big difference there because there's a tangible, important, touchable asset that we're talking about. The second major distinguishing characteristic is barriers to entry. Essentially, in the dot-com industry, if you had a better mousetrap or thought you did, you just needed a garage and some electricity to introduce it into the marketplace. That can't happen under the current regulatory framework in cannabis. You have to have a license. So there's a big barrier to entry. Then there are a series of other forces, I think, that will mitigate the risks. As I said, I think there'll be substantial fluctuation. First of all, you have the imminency of some action at the U.S. level, and I think there's a rising level of confidence that that's going to happen sooner rather than later. That's because of demographic developments, more states, changes in public opinion. I also think it's likely to happen because I think that the big strategic investments by Altria and Constellation have two important impacts. One is they establish an independent source of validation of valuations. You don't put $4 billion or $1.8 billion into a minority investment based upon froth. So I think there's a floor that they place on how far the industry could drop because I think there'll be more strategic investors coming in. The other thing is I believe that the entry of those types of players, the lawyers, the banks, the bankers, the C-suite execs in the new public companies, I think they've created a tilt in the playing field. If you look, for example, at Constellation, I'm not an analyst, but you cannot make that $4 billion investment pencil out without the U.S. opening up. So I think you've got a whole new force for lobbying. And these are players who know where the levers of power are used to pulling them, and now have real incentives to do that. So I think that's going to create an additional floor. Also, if you look at the demand in the industry, we know what the legal market is, but everybody believes the illegal market continues to be roughly 4 times what the legal market is. So there's a clear ramp up of available market. So it's what I would call, it's pull-through marketing as opposed to push-through marketing. So along the short, the other thing that'll happen if the U.S. legal situation clarifies, it'll have 2 very significant operational impacts. One is it will eliminate the banking impediment, which is a huge operational impediment in the industry. The other is it will eliminate the impact of Section 280E of the Internal Revenue Code, which basically denies cannabis companies the right to take normal operating business deductions. And so once cannabis status changes under U.S. law, automatically these companies are going to have a great positive impact on their balance sheets, on their income statements. So that's why I think it's going to be mitigated. I think that companies that fail, the public companies that have come out will begin reporting this year on the Canadian exchange. I think the companies that disappoint investors significantly will get punished. But I think other companies will be successful, and there'll be a whole nother round of acquisition activity. So that's why I think it's mitigated. Now let's let the real valuation people tell you why I'm wrong.
No, I don't think that you're wrong. I think that in any new industry, this is venture, right? In a sort of bizarre circumstance, you've got venture in the private markets and you have venture in the public markets, and so now you're putting companies, especially in the public markets, under the scrutiny of what a public company has to go through and the ramp up that it takes to actually execute. And ultimately that gives you less margin for error. So, as that landscape continues to shift, now you're seeing real companies report, now you're seeing, guidance being issued, and now you can actually track in terms of what the performance is relative, to what they think it will be, and whether, forget quarter to quarter, but from a year-over-year basis, are they actually achieving the ramp that they think they will be able to, right? Like you're seeing that both on the private side and the public side when it comes to plant touching businesses, a lot of ramp, whether that's due to just more people coming to the market or legalization. I think you're going to see volatility, right? Like I'm a fundamental believer that this is an industry for the next, or forever, really, right? And there's a lot of growth that's going to occur in the space. It's going to be a global space, but it's not going to go straight up. And there's going to be correction, there's going to be volatility, and people will, some will survive when the market comes down and, and emerge as a leader and a player. And I think some companies will get wiped out, or, new businesses will also be formed kind of when that happens, right? So you've seen a bull market to date, especially on the public side where the valuations are difficult to support, and I think on the private side, especially for some of the early stage businesses, it's a little bit easier to comp out, why these businesses should be valued at the level that they are. But ultimately, I think the environment that we are currently in is probably unsustainable. So, it's a matter of time before you see some sort of correction.
So just two comments. One is, if you look at the current valuations, and I don't pretend to be able to look at them from a technical perspective, in one way or another, they're based upon what I call addressable markets. How many licenses you have, where are they, what's the population, what's the estimate, and then some assumptions about how you're going to be able to capture that kind of market. The other thing is there will be underlying assets. So even in a company that fails, there'll be licenses, there'll be cultivation facilities, they may not be the best locations, but good operators will take a look at that, and those will continue to have value. And once they get low enough, they'll be worth something to somebody.
Yeah, there will definitely be a residual value, right? And I think what's also shifting in the industry is people are realizing that not all of that needs to be encompassed in one vehicle. I think early on, you didn't have the infrastructure in the industry to rely on other parties, so and the sources of capital, so you had to do everything, right? Which was your supply chain, your infrastructure, your real estate, and own all of those pieces. And now what you're seeing is more capital flows into the space. You're seeing real estate investors who will strategically take down real estate assets for you. You're seeing, third party, for example, contract manufacturers that you can leverage from a supply chain standpoint. So I still think there will be fundamental residual value of these businesses, but they're also thinking about ways to be more, capital efficient. And then the only other component, that I would add is a lot of this is based on what happens in the U.S. in terms of when we go rec, which I think we will. It's not a question of if. And then market size and sort of what that all looks like in terms of the governance. I think everyone makes an assumption that it will be interstate commerce, but there could be highly regulated interstate commerce or incentivized intrastate commerce. And so, all of those components I think will also dictate, whether some of these smaller companies end up going out of business or actually can maintain a market in a regional area.
The conventional wisdom, and I don't know, I'm not a prognosticator, is that action in the U.S. will probably be at the federal level to devolve to the states' authority to regulate and decriminalize as long as they're compliance with state. There's an interesting parallel. I come out of the banking industry, and in the U.S., believe it or not, interstate banking is a relatively recent phenomenon. And the way the interstate banking was initially phased in was reciprocity agreements between the states. So the Fed said if California says that Arizona can have an organization in California and vice versa, they can do it. I believe Oregon has just passed some legislation which is the very earliest stages of reciprocity, that they are prepping the way for if there is a devolution to the states of regulation. They're hoping that maybe they can do reciprocal agreements with other states to transport across state lines. The political situation in the U.S. is a little uncertain right now. All the winds seem to be blowing in favor of some kind of legalization or some kind of action. There doesn't seem to be a lot of support for opposing it. They continue to pass these budget amendments that deny the Department of Justice money to prosecute people who are in compliance with state law. You have the FDA has approved the first 2 cannabis-related drugs. They now have approved 2 Canadian companies to import marijuana for medical testing. So I think you're starting to see some of those barriers drop away, and they're all, I think, signposts.
Well, and I think on that note, to kind of reverse engineer this a little bit, it's a little hard. I guess we kind of look at the .com. We want to refer to that. It's the only thing that we can refer to in this particular situation. We are looking at a product that has been used for centuries. It's just come to the market. So it's not like the .com where it was brand new. I mean, we could almost sit there and relate it more to the blockchain space than the cannabis space. But I think, these companies, when they came to market in the Canadian side of things, in a public company, the directors could put out a press release not that long ago and say, we're going to entertain the idea of cannabis. And the stock would shoot through the roof. And the one thing people need to remember on the public side of things is that stocks are a secondary market. So when you're investing in private companies, the valuations are based on the company. The stock market is based on investor sentiment. So it does have a tie to the actual fundamentals of the company. But at the end of the day, what also occurred, because this is all brand new, it's kind of hard to know, is we also, when this all came about, ended up with a completely brand new generation of investors. Because finally, the next generation of investor wanted to invest in the small cap space. They understood the product, they thought it was sexy, they were excited about it. And that has taken valuations on my side of the border to places that don't really make a lot of sense. My concern is that the Canadian companies, because of our legislation, they don't actually generate a lot of revenue. But the valuations have propped up these companies to be massive conglomerates. And yet their financials are coming out and they're not generating any revenue. The opportunity on this side of the border is you guys have fantastic companies with great opportunity, great room for growth, and they're going to have to catch up to the valuations on our side of the border with those Canadian companies that are probably way overvalued. So I guess where I'm coming to is that there will be some kind of a correction. And also that's an okay thing, because in a brand new sector, that's what the stock market does. That's what growth does. It grows and it takes a moment and keeps going, right? So I guess my next question is where do you guys see this going next, as far as we recognize at some point there will be some form of correction, but on the public versus private side, where do you see kind of the next stage going?
Well, I think especially in the U.S., right? So what you had is you had a shortage of access to capital, and you had a bunch of Canadian companies because of just them legalizing, obviously way ahead of the U.S. So a massive market that emerged there, right? And then you had a market of U.S.-based companies who are using the Canadian public markets as a means to fuel expansion and access dollars in a more rapid fashion. And that's created this dynamic where, and the market dynamics are very different from operating, for example, in Canada versus being operational in 10 states in the U.S. With that being said, I think a lot of the demand that's gone into the Canadian public markets has been fueled by investors who want to participate in this industry versus the U.S. because you can't be a U.S. company that's then listed on one of the U.S. exchanges. There's a shortage of also supply of names that you can actually be in on U.S. exchanges, right? And so I think what happens shortly, because I know it's or imminently at some point, right? It's just there's conversations about the U.S. companies and the U.S. investment banks seeing everything that's going on in the space, and they want to be a part of it. And I think when those markets end up opening up in the U.S. and U.S. companies now have access to that liquidity on the NYSE or the NASDAQ, I think you're going to see another wave of increased valuations because you've got all this pent-up demand, that's sitting there that wants to have exposure in this industry, they don't have the ability or the capacity to get in, when these companies are private. So this is their first point of access. And when you provide them more names and more liquidity, I think you're going to see a massive, lift in the valuations, maybe to a point where they're untenable again.
Well, several reactions. I generally agree. One of the things I've seen at past Arcview conferences is panelists commenting on the change in the nature of the audience. And I would urge you to all look around. When I entered the industry, a lot of the money was coming, and it's hard to generalize, from the adult entertainment and nightclub industry, which makes a lot of sense when you think about the nature of those industries. What really got me involved in this industry was the first deal I did was funded by Midwestern community bankers, a whole different kind of investor. And I saw the evolution going to the more institutional side. And I think that's continuing to happen. So I am trying to give a talk at Arizona State University Law School, and the title of it is going to be From the Boardroom to the Bag Room and Back to the Boardroom, a Wall Street Lawyer's Odyssey into the Weeds. And if you look around this room, this shows what's happening. The fact that you've got the strategic investors like Altria. Also, and I've commented on this before, when Constellation made its investment, there were rumors about Coca-Cola looking at an investment. Now, Coca-Cola ultimately said we're not. But all I could think about was not whether they made the investment or not, but the mere fact that people could speculate about that and not be laughed off the stage. If you go back 3 years and somebody had said Coca-Cola's thinking about investing, forget the origins of the company, you would have been laughed off the stage. Now it is perfectly feasible that Coca-Cola could be interested. And I also think Coca-Cola is an interesting example for another reason. While they are a beverage company, they are also at heart a consumer products company. And so while we've looked traditionally at tobacco, pharma, and alcoholic beverage industry as being some of the exits, I think there may be a whole new genre of exits. And if you look at some of the pretty credible industry spokesmen, and when they talk about the actual size and growth potential of the market, they're talking at multiples of what you'll see in an Arcview presentation. Because we just don't know. We don't know how big the medical market's going to be. I don't think any of us can conceptualize the range of products into which this could be introduced. So there's some real credible support for the market. But again, there's so many uncertainties now, and there's going to be some shakeout, and some companies are going to get punished, and others are going to be able to scoop up the spoils. That's my view.
I think that especially these big companies that have been sitting on the sidelines, or the handful that have made investments into the space, they've got a buy or build analysis, right? Which is, I'm either going to build it from scratch or I'm going to buy because I want to enter in this market. And I would say 9 times out of 10, they're probably just going to buy because it doesn't make sense for them to spend resources and time, to build something when there's already companies that have some sort of infrastructure in place. And so I think the positioning, at least from the other side of that, is how do you also build a business that ends up being attractive as more capital and these larger institutions and businesses look to enter into the space. This is a CPG business. There's a pharmaceutical element. There's a health and wellness element. There's all of those big players are all obviously watching what's going on, in this industry, and a lot of them want to get in. And you almost hear on a weekly basis, a new news story about some major company structuring some sort of agreement about how they're going to start playing in the cannabis space, right? So that's a whole nother level, I think, of capital and also of qualification of value that we haven't even touched yet. And then when real institutions come and play in the space as well, when you think about it from the institutional investor mindset, because they can't touch the space given who their LPs are. And I think when those two things start happening, I think this market will also shift pretty
well. And as it relates to your entry-level phase of the business, because that's where you are, there is huge consolidation activity. If you think about all of the companies who were listed on the CSE and the amount of cash that they raised, so let's say we're talking a couple of $1 billion.
We raised, in the past 12 months, we've raised over $5 billion on that exchange, and about 65% of that is cannabis.
So to the extent that these cannabis companies raised cash capital. A significant percentage of that, I believe, is going to be dedicated to acquisitions. When you look at these acquisitions by the public companies, they generally start off offering 20% cash, 80% stock. They may go up to 33% cash. But back off, the average price that I'm seeing, one of my major clients, is about $15 million in cash, and they raised several $100 million of capital. That's 20 acquisitions. So I think that's going to continue to push.
Yeah, and I think the difficult part of that, right, is that acquiring a company is like a whole task in itself. And I think people don't realize the complexity that goes in with, molding two businesses together, albeit, 15 if you're buying a bunch of different assets and different, products and different infrastructure and lack of uniformity and all of those things. And I think that's a whole, another part of the business model that I think the folks who can't even execute on that piece post-acquisition are going to run into a lot of issues, right? So while everyone's preparing and saying, hey, it's greenfield, it's very fragmented, I need to go acquire, and once again, kind of, early stage companies with access to the public markets raised a bunch of money, without a real business behind it, are now trying to prove that business model, and then saying, well, in order to feed the projections and the top lines and the earnings numbers, we need to start acquiring assets, right? And then they go down that path, but it doesn't just happen 1, 2, 3, right? So I think
the smart ones acquire management with it, because that defines somebody who actually has made a profit in this business and bet on them. So
Well, and I think that's the scary part too, is that some of these companies, they were able to raise as much equity as they wanted. So they're sitting there with a bunch of working capital, and if they're not generating revenue and just maintaining their operations with those large valuations, what are you going to do next? You're going to acquire another asset, and a lot of those companies are going to be crossing the border, which they are, looking for actual assets that are creating revenue. But the problem there is that once they finally make the company what it's supposed to be worth, they've now acquired a bunch of assets, there's no upside from there. And I think that's where we really start to feel some strain on the sector in itself.
Well, I think the upside comes from organic growth, right, and the expansion of the markets. And as I think there's a fundamental belief, there's a whole section of the population that still doesn't consume cannabis in any way, shape, or form. And they're going to start with microdosing, and they're going to start with low impact as a means of getting into the space. And so, how do you convert call it 30% of the population to start doing that? So I think there's opportunities for that. From a growth story standpoint, I just think that going on an acquisition spree, we'll see how it all.
What's happening right now?
We'll see how it all shapes out.
What do you think the next? I mean, obviously, growers are. It's kind of being defined so quickly. Growers, the cost of your hydro and the cost of your land, and everyone's getting it down to how much per gram that they're growing. That story has been told. Where do you think, investors will seek the next play? Because I feel like the one thing that keeps getting brought up is this branding moment that's happening, especially in the U.S. We have restrictions in Canada for branding, so it's very difficult. And there's so many products coming to market. How do you stand out from the thousands and thousands of other products? So I think branding might be one of them, but where do you see kind of people taking their investment money next?
I think branding and marketing, I think product development. I believe, my personal belief is there should be a lot more money dedicated to the medical testing, which has been difficult in the U.S., but is now starting to open up, because I think that is an unknown, untapped market. We all believe, based upon the things we've heard about cannabis receptors, and I'm not a scientist, that we know that it will affect certain things. And just for the hell of it, think about topical pain relief creams. I just one night started thinking about that, and because a lot of people think that cannabis-based creams can alleviate pain and inflammation. The worldwide market for analgesic creams is about $8 billion, expected to double over the next 5 years. if cannabis-based products really work, aspirin cream is going away. You're going to have half that market. So just think of that one single application being potential $5-8 billion, and how many times, if the medical really comes to fruition, could that be multiplied?
Well, and I guess to that, I was, as you were saying that, thinking, but the secondary market, it's not as sexy as, kind of some of the more recreational retail brands that are coming to market. Those will have potentially a bigger play down the road once we get bored of this side of things. But it also raises the question that if we do have a bit of a bubble that pops, we have a brand new generation of investors that are coming in. It's the first time that they're going to lose capital in the markets. How long do you think that could last for them to come back and bring their capital back to the markets? I mean, that could last us a while, right? Because it's going to be their first experience in it.
I mean, I think that we live in an age where, people
forget easily.
Yeah, we forget easily, right? So I think, it obviously is going to hurt, but I think people, get over it and figure it out and sort of, if you believe in the fundamental growth story of this space, you'll find a way to be invested in it. I think, look, on the brand side, it's just, it's a very fragmented landscape. Generally, brands have had, at least in the U.S., difficulty of scaling across state lines. So some have gone the asset-heavy approach, and some have, tried to execute sort of on the licensing side, which if you have the supply chain to do it on a state-by-state basis, it's possible. Ultimately, a real brand is one, A, with brand equity, B, stands or means for something, and C, delivers a consistent experience to its consumer. And until you can, you personify or embody all three of those, I think it's very difficult to really build a true, long-lasting, scalable brand because, when you have a Pepsi, it tastes the exact same, whether you have it here or in Texas or in Oregon.
That's a really good point.
Right? If you're consuming this product, but you have a different effect on your body every single time you do consume it, depending on where you buy it from, it's really hard for a consumer to have allegiance towards a brand. So then, how do you separate from all the product SKUs and all the form factors that are available on the market on a state-by-state basis? Makes it challenging.
Well, and there are two other points on the pop of the bubble. One is that you got sequential events that we can't really predict that will have an opposite impact. So, for example, let's say there's a bubble that pops and then the U.S. goes legal somehow. That's going to support that marketplace. Or the bubble pops and another big strategic investor comes in with a multi-billion-dollar investment. That will raise confidence again. So I think my view is that unless there's an unforeseen medical, social, or scientific development, I just see this progression growing for the next 10 years anyway.
Yeah, I mean, when you said that, I just thought about kind of the volatility that happens in the public markets just off of like announcements. It's crazy how much stock prices move when someone puts a news story out on, on CNN or something, or gets picked up by one major publication about a partnership or an R&D relationship or some sort of agreement that's structured or any just anything really that just drives drives the valuation of some of these companies. So it's also over time that's going to diminish, but in the short term, for a variety of reasons, some more technical than others, it's an interesting sort of area to sort of observe.
So also, let me give a plug to the CSE. I have worked with Anna and her colleagues now for about 6 months to a year. They are a tremendous asset if you're thinking about the possibility of going public. They are a huge resource. They're very honest about what their pros and cons are, and they're very helpful when you have issues. So, free ad.
I had to buy him dinner for him to say that, so thank you very much, Steve. Thank you very much. We're running out of time. I don't know if anyone wanted to pop up and ask a question while we're sitting up here. We could probably go on for hours, but our time is up. Any questions? No questions? We covered it all. You fully understand. Thank you so much for joining us, and thank you again to Arcview for putting on these amazing events. It's a real opportunity for everyone here.